Welcome back to the Money Focus Podcast. I'm your host, Moses the Mentor. And on this episode, I'm bringing you guys Tariq Collins, also known as Dr. Black Wealth. He's here to talk us through his entrepreneurial journey, give us some insight into his business, and really offer some great tips and financial education to help spearhead your financial future. So sit back, learn, grow, and pay it forward. Let's go. Thank you for joining Money Focus Podcast. Really appreciate you taking time out your busy schedule to come talk to me. The first thing I always like to ask my guests is to walk us through your career journey or your professional journey and ultimately how you started your business. So the floor is yours.
Yeah, for sure, man. First of all, it's my pleasure to join you and your audience, and I want to appreciate you. Thank you for hosting me. My career journey, interesting. So I guess a quick synopsis of it will be, my career started military. I went military right out of high school. Did about 4 years in the service with the Army. When I got out of that, I did some government work. But it landed me from doing government work and then jumping into going to college at Regis. I ended up landing a job at Northwestern Mutual. And so how I got in finance today was from me starting at Northwestern Mutual, of which I met a recruiter, drank the corporate Kool-Aid, of course. I was out in Colorado Springs. Love the company, love the motto, I was hyped about every single thing about the company, right? Did the internship because I was a non-traditional college student at Regis. And then I went full time. So I quit working at the government and went full-time contract with Northwestern in 2018. I did the internship in 2017, full-time contract 2018.
And, Dr. Black Wealth is what you go by these days, and you started your company. So talk to us about how you got that name and what spurred you to, name yourself that and how it actually aligns to your mission with your company.
For sure. So it's funny. It's so funny because I think the name came to me. I think me and my wife was just kind of battling. I was trying to figure out what's a good name to take my Instagram, to change up my Instagram name. And right. I can't remember. I really want to put the accolades for her. She was like, "Ooh, we could go with Dr. Black Wealth." One of my friends or associates on his handle, I think he had Mr. Wealth Coach or something like that. And I was like, yo, that wealth is sounding real good. And I think she came up with Dr. Black Wealth. And it's funny that we just came up with that because I'm talking wealth, right? Of course, I'm Black, right? But then when you look it up from a financial perspective, basically for what we're doing now, Black is good. That's good profits, right? So we in the financial sector, being in the Black is your books having good profit, right? We making profit. We not in the red. We not in the hole. We not digging out. So when you put that thing together, it's like Black Wealth, right? We profitable. We getting wealthy. And then it just aligns with what it is that I talk about based off how I started my business from the backgrounds that I had.
That's nice. Yeah, definitely being in the Black is a good thing.
Yeah.
So, and being Black is a good thing.
That too. Yeah.
So,
it's all
yeah, exactly. It's all good across the board.
For sure.
So, do you address any of the financial challenges or impacts to the African American community though within your business?
Yeah. So, we do. So first of all, I educate, and my biggest platform for educating, if you look on Instagram and everywhere else that we are, we also started a podcast. We're on YouTube with the videos called Minding Your Biz. It's really all dedicated toward the poor, right? And so in particular, inside that poor is Black people. So when I started with Northwestern Mutual, I remember being excited about it because I was learning a whole bunch about finance of things that I've never heard in my life. You know what I mean? I never heard nobody talk about life insurance. I never heard nobody talk about wealthy income. I never heard anybody talk about retirement accounts, right? I knew about business because I always knew like my dad and my granddad was business owners, but I still never understood like to the extent what they was doing. Was they successful? Was they, you know, what that looks like? And for that matter, eventually my uncle too. But when I started Northwestern, I'm like, yo, this is going to be dope because now I get to educate our people. That was my first mindset going in there. I get to educate our people. Ain't nobody having life insurance conversations at the table, stuff like that, right? And then I got hit with like a rude awakening because I had to make sure that basically in order for me to eat or live through Northwestern, we had to sell life insurance. Most of our people wasn't equipped, especially then. This was, you know, maybe a little bit more now. It's a little bit more educational and a little bit more trendy to talk about it. But 17, 18, it wasn't really that trendy still. You know what I mean? It's like if you was black and had life insurance and was just had a certain type of financial acumen, you just was somebody who was in that group and that was it, right? Like if you knew. That was the type of thing I always ran across. So I had a mentor who was like, listen, man, you know, you got to go after the AAA market, right? Affluent African-American market. All that other stuff you're trying to do and save, you're going to have to basically like, it's like charity work, build a library for them or something like that. Cause you got to get paid, of course. So that always kind of stuck with me. But, and I always was like, man, it's gotta be a way where we can educate our people. So when I started my business, it was a good, like bridge your gap. So not that our clientele are low income or not, but we do educate on that space because outside of just being black, poor people, period, just have a lack of understanding about money, business, wealth. And so our platform pushed to educate. We got diverse clients, not just black. So I just make sure that we kind of, you know, we educate in that arena. But I do for sure 100% agree that our people nobody's talking to our people about finance. Well, even as trendy as it is today, there's still some nuances that most people don't understand. You know what I mean?
Yeah. Yeah, that's part of the reason why I started the show.
Mm-hmm.
You know, we talked before we start recording, and my background is rental property investing, right? But not everybody wants to own a rental property, right? And it's so many different ways you can make money, so many ways you can invest in real estate. And what I wanted to do with the podcast is spotlight people like yourself and other people who have their expertise in their area to really kind of showcase, hey, you can learn about a million different ways how to make money. You know, you can get little tidbits of education from each guest and say, wow, man, I want to know what Tariq is doing. I want to learn about life insurance. Or you can talk, you know, to my next guest who's talking about mobile homes. You know, it really doesn't make a difference. So it's really about putting easy to understand concepts in front of people. Now, what they do with the information is up to them, but I want to make it really palatable for people when they watch the show. So what would you say is one thing that foundationally every person that's listening to this episode should know about money and finances?
If I was to choose one thing, I think everybody should be clear on their own personal finance or business finance. And what I mean by that, like, is understand like how you making money, how often you making money, how much money you making, and understand where you're spending money, right? I mean, even I still a little bit have challenges with it, but there really should be no dollar that's leaving your account that you didn't assign, right? So there shouldn't be like no unexpected bills that pop up. There shouldn't be like, oh, let me go, you know, spend the bag this weekend, and you really don't know how much you really got to spend. You're just hoping that even if you're getting paid regularly on every week, every 2 weeks, once a month, whatever that looks like. If I was to give somebody one thing, is to really understand your own finances, because once you do, the ability to make decisions just dramatically increase, right? So if on the personal side, like if I just work a job, I'm getting paid first and the 15th, right? Let's say I get $5,000 a month, right? If I understand that rent is $2,500, right? That's half my money right there. You know what I'm saying? Right. And so understanding that helps you make better decisions on like, listen, where you going to live? That's one. How fast you should be growing a family, intentionally doing stuff like that, right? And these are things that I never even took in consideration, when I had my family. Also, it could be an assessment of how much time do you work to make this type of money, and what do you want to do to increase your revenue, and whether that's spending more time at school, getting another degree, or spending enough time like asking somebody, learning how to do a trade or a specific skill, and then figuring out that time it takes you to, implement it to make more money. But if we all could get really clear on our financials, business and personal, it makes for better decision making for everything that you do.
Yeah, it sounds like you're saying, hey, once you identify that, you got to also live within your means. You know what I mean? Because the moment you know what you have, it might be a wake up call. Because you can't live like Tariq. Keep balling. You know what I'm saying? You can't live like it.
Yeah.
And if you want to, you're gonna have to do a few things. It sounds like you mentioned about skilling up. So it could be a skill. Whether it's a certification, whether it's a degree, whether it's paying for some mentorship, something to get you in a position to grow your income, or you're going to have to really buckle down and say, all right, well, I really can't afford that. I just need to cut some expenses. You gave the great example of, and it sounds harsh, but that's realistic. A lot of people spend half of their income, take-home income, on housing, which is nuts. It's something that really puts you in a bind when you have that large chunk going toward housing. Mm-hmm. And these apartment complexes and rental, companies, they don't care. They're approving you based off your gross income, not your net income, which is absurd.
And
I always tell people, hey, don't do anything based off gross.
Yep.
So that's simple.
Yeah.
But what were you going to say?
No, I agree. And I was about to say, most of that, 9 out of 10, you typically need 2-3 times income to even qualify for rent, or, what I'm saying? You definitely need a substantial amount of income to qualify for a mortgage, right? And we still don't take those things into consideration. And when you look at it, I think the median income is not even at 50 grand a month. 50 grand a year. So when you think about that, like, how many people really can afford to live in a place where and that's not even considered where they want, but where they need to live based on, and that's why I say we understand our finances. It helps you, because while you having more kids, right? Because now it's increasing your household, and we haven't even got a handle on our money, right? And so, and I'm not coming from a place of bashing, because I've been that person. I am that, you know what I mean? Like we just frivolously live life. And I think if we start to be more intentional about everything, and the first thing we need to be more intentional about is our money, because I think it drives the direction of where we go next, right? If you like, listen, we ain't making no money, or we don't come from money. What is it that I want to do? If I go to school, let me make it be worth my while. Do I want to become a doctor? Do I want to become an engineer, right? Do I want to become something that's going to specifically get me into a high income trade or revenue, right? Or do I want to produce a skill that's going to get me there, right? I'm not the first to believe in cutting expenses, right? Because 9 times out of 10, the stuff that you're purchasing and buying and using, you mostly need it versus like necessarily wanting it. However, that's not saying you need to trim the fat on unnecessary frivolous spending, like, subscriptions you ain't using, cut that stuff out, right? And so that's kind of my take on it. But I'll always be like, it's not a this or that, it's a both and. We need to increase income, and we need to monitor our expenses, because monitoring expenses could be like, let me call Comcast and negotiate how much this bill is. Listen, how much do we really maximize the internet? Do we need high speed? Do we need low speed? Based off users, whatever that look like, to chop the bill down, still stuff like that.
So tell us the name of your company and also the services that you currently offer.
For sure. So Eagle Financial Group. Eagle Financial Group is a financial firm. The services we offer are things from tax preparation, bookkeeping, accounting services, CFO services, payroll services, and tax planning services. That's what we currently offer right now. So annually, we take in an influx of annual tax clients, and we also have our book of monthly clients where we're servicing their books monthly. We're doing advisory service on them or CFO services with them. And so that's what we do.
Yeah, so it's April, what, 23rd?
Mm-hmm.
So you probably were slammed within the last week or so. So
Right.
are you going to take some time
still
off?
slam.
Are you still slammed? People doing what, extensions, stuff like that?
People doing extensions,
Gotcha.
getting some of our, monthly clients done because I did extensions on them. So just, people last minute filing, big influx on people not filing. So, we are a full-fledged firm, so we work throughout the year. So, and just on that note, right, just because it's past April 15th doesn't mean that you can't file, right? So if you owe, there are penalties associated with not putting an extension in and owing. So that's kind of where those penalties and penalties will accumulate. But if you know that typically you get a refund, or there's a possibility you can get a refund, you can file anytime throughout the year, like all the way up until November, really, for the past current tax year.
Do people mostly, file extension? Is it truly a strategy, or is it more people just really got a lot going on? They might have not received all their tax documents because, I try to file as fast as possible. Mm-hmm. So when I always hear people waiting to the 15th, just curious, like in your experience, what is typically the reasons behind that?
So it could be a couple of things. One of them is, so I typically do it now for a strategy process, right? For clients, especially our business clients and monthly clients, because typically what happens is we got to look at it like this. Well, let me answer your question before I explain it. So I typically do it now for a strategy process. Most people who file late or running up on their deadline are typically people who owe. Most people who get refunds, they trying to file soon as IRS open, January, what's it date that they open. People who know they get refunds consistently, they're trying to file fast, quick as possible. People who typically waiting be people who, know that they owe high income, or if they have businesses going, multiple businesses, we got to pull K1s from here and here and here, right? They understand what that game is. So it just be a little bit of delay to get all paperwork in. But from a strategic standpoint, typically April 15th is the deadline. We got to have a deadline for a couple of reasons, right? As far as we know, America, the government runs like a business, right? So income tax is the income that the government receives, America receives. So based on us having the deadline is what puts us in a position to where Congress can set the budget for the year because they know what actually came in. They get a projection about what they looking to spend and based off money that they came in. Now, of course, if you look, we are trillions of dollars in debt. However, we still got the deadline to ensure that we got income coming in and plan out our spending budget for the year, right? And so typically the audits process is done on a random basis, right? They say random, on a random basis. So typically people who file their taxes on time, you be in that number of that random basis. Most people who do extensions, because the IRS already met their quota, right? You are less likely to get audited. Not saying that you won't get audited, but sometimes you're less likely to get audited because they hit a numbers quota already. So that's the strategic play behind it.
Gotcha. I always, obviously, well, maybe more people know than me, but I always figured, an audit would be based on like certain thresholds, that a return would meet. Like if you're trying to wipe out all of your income, that would be a red flag or something like that. But you're saying in your experience, it's truly a random process. Or
yeah, so it's certain for sure. So there's certain things that can trigger audits for sure. Like if you just kind of constantly underreporting income or trying to drop income, stuff like that. But just based off the IRS giving out credits and then business owners taking deductions, right? Anybody can get hit with an audit anytime. So like let's say somebody's single with kids, typically they like to file head of household. Well, because that's a credit, you could be hit with an audit to prove that you are actually head of household by meeting the qualifications to get that credit. Do you have children? Are you the sole provider? Are you the, the head of that house in particular, right? Do you meet the income qualifications to be considered head of household, right? For a business, they're getting audited. They could get audited. It won't necessarily be because they wrote stuff down, but it will be an audit to explain and prove expenses that they have. And because that language is so broad, right? So the IRS, the tax code says that a business can write off ordinary and necessary expenses. Well, the way I like to describe it is the IRS don't tell you what's ordinary and necessary. You do, because you're the only one who knows your business, right? And so from an ordinary expense, like if we all have accounting firms or we all in real estate, some ordinary expenses for real estate might be things like what are the mortgage. We don't get to write that off, but like property taxes that we pay in on the property every year, the mortgage interest if we have a mortgage on the property, right? Those are ordinary expenses across the board. But what might be something that might be necessary to you that might not be necessary for me if we're both in real estate? Well, my property, I might do real estate related to tax deeds. So my necessary expense might be something like county fees or register with the county to, what those fees looks like versus yours might be something different. Same with every firm. And so I like to look at necessary as like a branding standpoint, right? So like I'm Dr. Black Wealth, you're not. So if I write something off that tags me that say Dr. Black Wealth, that's a necessary expense for me because it's associated with my brand. When people think of Dr. Black Wealth, they're going to think about Tariq Collins, right? So everybody's not like that, right? That's trademark. So everybody's not like that. That's a necessary expense for me. So the IRS will say, hey, you wrote off $50,000 in office expenses, like prove this deduction. And so we'll have to go through P&Ls to make sure that we can itemize what we spend. Sometimes they'll go through bank statements to make sure we match the record. And sometimes it's just automatic. So most of those guys and girls that work at the IRS, they don't really know business and stuff like that. They're just following the guide, they employees. So they follow a guideline. Hey, Tariq, you got audited for this. We need to see proof of this. Send it to us. And as soon as you send it, it goes away, right? Because it's just basically them asking. So, and I like to explain it that way because most of us get triggered from anything we get from the IRS. We get triggered for it. We get, I don't want the people in but it's just a part of the money process. And this is where I say, right, you asked me what's the one thing, get clear on money. IRS is one of those things to get clear on money about.
Well, yeah, you broke that down because I was definitely going to ask you how important it is to understand, tax strategy and things like that. But let me follow up with this because I remember, I think it was last year or maybe year before, I know that the IRS had kind of proof of funding to hire more agents. Mm-hmm. But is it effective this tax year? Do you know about that or?
It went through. I gotta remember if that bill actually passed, but they did, right? And so they're looking for agents, so when they look for agents, those tax agents, they carry in weapons. You gotta be authorized to carry weapons and stuff like that. Oh, typically, they're going for like higher end. We talking millionaire, like multimillionaire, billionaire type of clients. So these will be people who would necessarily, like, your household name, the government know your household name. So these will be people like, I remember Tyler Perry explained the story like this, right? He was like, listen, the IRS people was following him because they were saying that they was trying to make him owe taxes. And then upon him looking at his taxes from going through the audit process, he found out the IRS owed them money, right? So those tax agents, those will be the people who will be following you like, yo, you owe money. You like evading taxes, things of that nature. So.
Okay. Ooh. Okay. So it's worse than I even thought.
Yeah.
So these are some. This is a tax enforcement physically. Yep. Okay. Yep. All right. Gotcha. So what are some strategies though? Because kind of just use me as an example. I'm from Brooklyn, right? And I remember, thinking about corporate careers and thinking about what I want to make and. When I got to the point, I'm like, wow, I'm making this amount. The biggest disappointment was that now you go into a different tax bracket. So it's like, man, they just start taking taxes left and right. So that's what kind of also started me and my wife to start looking to real estate to kind of offset some of our taxes because our tax rate drops because of the write-offs that we're able to take off in our real estate business. So what would you say for people? Like, what is some advice to help people overall as a standard to help them pay less money in taxes? What are some good best practices?
For sure. I say you start a business, right? So, and specifically if in that arena, like if you, so it depends on the type of person you are. First of all, let's understand business in the IRS context and its definition and what they got on there, right? So one of my sayings I like to say is everybody's a business owner. The reason why is because all income, according to the IRS, is reportable. So let's say if we working for Amazon, we making $100,000 a year, right? But on the side, if I sell something, get income from doing something, little play, whatever that looks like, by law or IRS tax code, I'm supposed to report that income. Well, when it comes times to doing taxes, the only way to report said income is for you to put it on a form called a Schedule C. Now, when you look at the Schedule C form, it's called Schedule C/sole proprietor form. That's the same form that if you are a sole proprietor or a single member LLC, that's the form you use to file your taxes, which makes you automatically a business owner. Even if I'm a 1099 contractor, right? If I get a 1099 from Uber, Lyft, right? Or any type of side, Instacart, all that stuff, that 1099 is reported on that form. So in my mind, I'm like, listen, you already a business owner. So now you get to what's the tax play? Now you kind of get to expense your life out, right? Because now if I have a business, now I can take advantage of the home office deduction. I got an office inside my home. I need my cell phone for business use, right? So now my cell phone becomes a deduction. With the home office deduction, you automatically writing off a percentage of mortgage or rent, utilities, things of that nature. And so then now you see what I'm saying? Now you start to incur that play. Now, if I'm a high income earner, let's just say I don't want to start a complete business that I'm doing from scratch and got to do A, B, C, X, Y, and Z. I'm just a high income earner making anywhere from 6 to 7-figure W-2 income. The thing I would tell you to do is start investing for one, be in stocks, right? So you can start diversifying your income because number one, that income you can't do nothing with that income that you're getting from your employer, meaning pass it down to anybody. So I would start investing stocks and bonds and all those things to make sure that we are diversifying our money. And the second thing I would do would be real estate. Why? Because real estate is the ultimate, it's one of the highest tax plays that you can do because the IRS says, hey, I can buy a piece of property. I can buy residential property. We know that the property is going to appreciate in value because that's how the state based their property tax off of, right? So we understand that that's going to happen. I understand that you still got to get a loan from the banks for you to even mortgage out this property, to own this property, or to purchase this property. But the IRS do something that's called a useful life. They understand that if a residential property is in play over the time span of 27 and a half years, it really the property of itself depreciates or lose value within itself, right? And so we're allowed to write off automatic house, depreciate the house for 27 and a half years automatically. So the more and more homes that I'm adding on, those are expenses that the IRS is called phantom expense. So let's say you like, well, it's going to make me lose income. How can I get loans? Well, what the lending people would do is add that money back to your taxes so that your income goes back up, right? But for tax purposes on paper, you lose money. And so that's kind of the best thing that you can do. And so typically people are like, hey, I don't want to do that. Well, if you don't want to manage it, you can easily hire a property manager because typically people who are in that high income, you typically have good jobs. You typically show good income, typically worked on good credit, right? And so to get approved is nothing, right? If you don't want to do it, partner with somebody who can do it. Now you got a 1065 partnership taxes. Let's say you don't want to do that. Well, invest your money outside of stocks, invest your money with people who are in real estate that can do syndicate deals. So So now you guys are going after commercial properties, apartment complexes, more than one unit dwelling places where you're investing money that's giving you a return, right? But it's giving you a deduction off your tax return, and it's benefiting you long term. So that's kind of some of the stuff. If you're a business owner, of course, there's plenty of different tax strategies already.
You broke down so many different options. Wanted to just touch on the syndication part. I mean, that you get all the benefits without being an active investor, with that. You're putting your money to good use, getting the real estate deductions, but you're not buying the properties, managing the properties, dealing with the day-to-day. So when people say, oh, I don't want to do real estate, I don't want to be involved, that's because they're not taking the time to educate themselves on the different levels of engagement that you can play with different types of real estate investments.
100%. Those syndicate deals work. And typically, if somebody's a real estate investor at a certain level, they start looking for people because those are funding, private funding, lending options that people have available, which are people's own 401ks that they can cash out, own money that's sitting in there that you're not using, right? Because any dollar that you're not actively using or impregnating, in a sense, you lose in value on the money by letting it sit into an account. So why not put it somewhere where we can make some money long term and we get a tax benefit and at the same time, and you still enjoy the work that you're currently doing?
Now, for me, just asking the question. So right now, I guess I would fall into a high income earner. I have a great corporate job, but my plan is to leave that job at some point within the next few years. From a tax standpoint, when I go from having W-2 wages alongside my business income, what impact should I be kind of looking out for once that W-2 income is gone and I'm solely like a business owner?
Sure. So the impact, it's a lifestyle change. So the first thing we got to get clear on is how our business is making money, right? So I know that you have the real estate going on, right? And so sometimes, depending on how efficient we are with the real estate, it's really hard for most real estate people to find cash inside the business, right? Unless we're going after really good deals, or we're doing fix and flip properties to where we're getting a huge influx of cash. But one of the biggest things that we have to consider is the fact that you're not going to be on W-2, you're all in on your income. So the first thing we got to do is get clear on the income, get clear on the money, so that we can separate our business expense from our personal expense and realize that the money in the business account is the business account money and the business money and not your personal money. So for personal reasons, we need to segment out how much money you're going to transfer yourself. Depending on when you exit the job and how successful the business is will determine what entity we might need to be in, to just in case you can put yourself on payroll and issue yourself a W-2 for your business, right? From a tax perspective, if we're LLCs, you're still going to file a 1040. You're still going to file a joint return if you're married. Those type of things won't change, other than the fact that you're not paying taxes on W-2 earned income. So the other part about that too is depending on the type of entity we are. So let's say we're not an LLC, but we go S Corp to put ourselves on payroll. S Corp now becomes passive income. So it's not considered active income, right? And so those are kind of like the biggest things we want to kind of make sure that we pay attention to when we do the transition.
Yeah, those are the things that I'm educating myself on now, because, keeping a job is important because, you remain bankable. And that's important when when I'm going for financing and things like that. So preserving that W-2 income looks good on paper. Personally, we live way below our means to make sure that, we can continually invest. And when we make the transition to full-time entrepreneurship, we'll be able to survive. But I want to talk about credit, because my wife has flawless credit. When I went into this marriage, I thought my credit was up good or whatever, but it blew my mind when you have excellent credit. Excellent credit is another level. When you're able to go in and they're throwing products at you, they want to hand you the bank. And when I seen that, I said, whoa, like people don't understand how important it is to have A1 credit. In a lot of ways, I used to feel so discouraged because I'm like, man, I make good money. And they still wouldn't give it to me. That FICO was more important than the income. I was making more than people what was coming in there, half of what I was making, and they was leaving with loans. So talk to us about your experience about, making sure you have great credit and managing your debt effectively.
Sure, credit is powerful, right? So most people don't understand credit, and so we just never was taught about how to use credit, how to build credit, and why credit is important. And you're right, most of us fall in that aspect of where it's like we gonna use cash, and a lot of that's generational, right? Grandma and them just use cash. They had their mattress in there. We just, we paid. If we couldn't pay for it, we didn't do it, or we was on a payment plan, or we did the layaway, or we did the renting, the rent situation. So we just wasn't on credit. And most times, if from our community, if we dealing with credit, is maybe our parents putting some stuff in our names because we got to get approval for lights and necessities of life, right? And so, but credit is very important because credit teaches the bank and you, but more so the banks or whoever typically the banks, because if we going after cars, we dealing with a bank. If we going after mortgage loans, we dealing with a bank. If we going after business loans, we dealing with a bank. It teaches the bank how reliable you are on paying bills and how not only on paying bills on time, but how you can manage the money that you're given, right? So if we treat credit like it's not extra money and it's our money with the ability to pay it back, right? That's how the banks is looking for it. So it's very, very important. And to build that, I think the easiest things that we can start doing is once we get approved for credit cards, start paying necessity bills on those credit cards and then just pay the credit card balance when it's due. We got to understand that game too, because typically some credit cards have a due date and then they have what's called a report date. So the due date will be when the credit card is due. We got to either pay the balance or the minimum balance that they sent, right? Then the report date be when they report to the credit bureaus on your balance. So when you find that out, now you know how to play your game. Now you know how to manage and spend and pay off money. So let's say, for instance, your credit card is due on the 10th, but the report date to the credit bureaus is the 15th. So we want to make sure we pay the bill on time for the 10th to be satisfied and in good company with the credit card company. But then by the 15th, we want to make sure we get that balance down to under 30%, maximize it at that 10%. So when it reports, it's reporting on our credit as high, as high credit limits, no late payments, and no over 30% limit. So our credit report maximizes high. And then it's the different types of credit, different types of lending we put on our credit report. So revolving accounts will be credit cards. Installment loans will be almost like everyday personal loans or your mortgage, or loans that just kind of steady with the same rate, don't change, and that you consistently can pay it and pay it on time. And so it's very important for us to understand. And at the same time that we build money, build business, or build our economics up financially, start making more money, we also need to be more intentional about, we need to be as intentional about building our credit and making sure we maintain good credit.
That's an excellent point. Thanks for the breakdown, because I just want people to understand that, even if you're making a lot of money, that credit is huge. And unless you have a partner, I was fortunate enough, my partner is my wife. But even if you have a partner within your team, saying you come and have a partnership, having someone who just has that credit score, I believe probably 750 and up, FICO, true FICO, not Credit Karma.
Right. Not Credit Karma.
Not Credit Karma.
Right.
That'll get you in trouble. Someone with a 750 FICO or higher. If you have that person on the team, I had a video on YouTube I did last year. I said, that person don't have to do nothing. Like, seriously, that person can just sit there. When it's time to run credit, that person is just as valuable as the person doing, like the dirty work. What I'm saying? That score, you need to preserve it, because it makes such a big difference because your cash flow, that spread is huge. And when you're dealing with, interest rates going from, 200-300 basis points difference potentially based off your credit score, that person who has excellent credit, not great, excellent credit is so valuable.
Mm-hmm.
So it's key. So I appreciate everything you broke down for us. I wanted to give you the floor and kind of share your final thoughts or final advice for the audience, and also break down, how to contact you, your website, any call to actions and social media that you want to share. So the floor is yours.
Yeah, for sure. So, final thoughts would be, listen, we got to get serious about our money, right? You going on my page, I'm always talking about money. You might be like, why? Because money is the thing that revolves everything. The more clear we are with money, the more clear we are with life, right? And you think about it coming from places where we lack that type of understanding. The less money we have dictate our circumstances and our choices around what we did. It kept us in trouble. It kept us in low life stuff. So the more we can get clear about raising our income level, the better quality of life we'll have. And so our firm is here. We work with businesses in all 50 states. We work with individuals in all 50 states, whether we're doing annual taxes or we're doing monthly services. We also do consults. You guys can reach us out. So reach me on Instagram at Dr. Black Wealth, Dr. Black Wealth on Instagram, and we'll be sure to reach out and make sure we set up an appointment. Y'all can let me know y'all came from the Money Focus podcast, and we'll give you a free initial consult interview where we'll go through a quick little discovery for you with no charge. We also got the podcast Minding Your Biz on YouTube. And that's also, all those links is in my bio on Instagram. So reach me on there, Instagram or TikTok, Dr. Black Wealth, and let's make sure we minding our business, minding the bills that pay us, and minding our families, because that's how we change and bridge the generational wealth gap.
Perfect. And I'll make sure to include all that information in the show notes. Thank you so much, Tariq, man. It was a pleasure talking to you. And we out.
All right, man.
Thanks.
Appreciate it.